While everyone seems to be focused on the price of oil and what's going on with stocks, we also wanted to point this out to you. Look at silver. It's actually the silent scene stealer hitting a 10-month high. This is the intraday picture, but if you backed it up to just at least half a year or anything else, you would see that it's been languishing, not doing well. Suddenly it's spiking about 4%. So where should you be putting your money? You want to be ahead of the game, not behind it. Let's get to the floor show. Traders at the New York Stock Exchange and the NYMEX. I'm Elliot Warren. I'll begin with you because oil, such a big story, certainly. You had the disaster in Doha, disaster at least for OPEC, certainly not a consumer here in the United States. But looking at oil's behavior, what does this tell you right now? Didn't panic and fall entirely.
No, it didn't panic and fall. And also there was some news that there was this, a strike in Kuwait that was sort of driving the price of oil up. And I've heard that actually that's not the case at all. To be honest, what oil's done today and in the last week or so is a bit baffling to me. I'm always a big seller, but now here as we approach $42 again in crude, you have to really take another look at it. I think unless we really top over $42 and give it some room to run, I don't see it going higher. But over 42 bucks, I would temper my selling.
Okay, we're at 41.03 at this very second. Let me get to Stephen Guilfoyle. Sarge, the behavior yesterday was interesting. We jumped up above 18,000. We closed there by a couple points, and now we continue to move higher. Clear sailing here. You have earnings that were really pushed down by so many analysts, and so you have people beating, you have companies beating lowered expectations, and everyone says, oh, yay, the bear is dancing.
Well, what we have here in stocks, we have a central bank that's really handcuffed by the poor macro. They can't move. We have high short interest levels, and we have high cash levels still. I mean, we're starting to saw through that short interest, but we're not there yet. So the impetus here, the momentum is to the upside. We haven't gotten over 2106 yet on the S&P, which for me is a level that we have to get over and hold in order to move on. But we are comfortable here. We have moved sideways today, a nice digestion day. This morning I thought we might crack and go lower when we got down to 2092.93, but we didn't. And here we are back at 2099.
Yeah, here we are, 2099 exactly. But we'll see. So that level you're looking at is 2100. The dollar got really weak today, I think, and suddenly you started to see commodities like oil and silver move better. But what does that tell you about the big names? J&J doesn't seem to be hurt by this at all, and they were one of those big names that a lot of people who are watching right now hold in their portfolio somewhere that were hurt by a stronger dollar. Finally, the dollar steadies. What does that mean for this quarter and the current quarter and names there?
Well, I think the Fed is making a real attempt here to keep the Dixie around 95. You saw Rosengren, even though the dollar's down today, you saw Rosengren remain hawkish last night, even though the macro's been kind of weak. So there is an attempt every time the Dixie gets down around 93 to push it back to 95. Also, they bring out the doves. Janet Yellen comes out with her big hammer every time the Dixie gets around 98, 99. So I think there's an effort to stabilize the dollar here.
Yeah, we'll watch it, and that, of course, affects oil. Great to see both of you. Sarge, Elliot, thanks so much.
Thanks, Liz.